Well, I might be the new Jim Cramer because a week ago on February 1st, I posted a video saying do not buy Super Microcomputer. Since posting that video, the stock is up 35%. And I say that because there's a running joke that Jim Cramer is consistently incorrect about the stocks that he picks, especially around the time that he gives that advice. So it's very interesting that I put this video out and now we are seeing just the opposite happen and Super Microcomputer stock running up in a major way. Go back and check out that video because I actually don't talk poorly about the company and their fundamentals. I just talk about the risks that there are with investing in this company. But this past week, we saw a couple of those risks actually start to subside as the company posted two announcements to their website. So today we're going to take a look at those two announcements from Super Microcomputer as well as analyst expectations from their earnings and use those numbers to project potential price targets for the stock. I still stand behind my statement in last video to not buy this company because there are a lot of risks that come along with it. So if you haven't watched that last video, go check it out. But thank you guys so much for the support on the channel. If you do enjoy this type of video, subscribe for more and drop a like down below. It really helps the channel out. Transparency is so important to me, so I really try and prioritize it on this channel. Right now, this is the YouTube portfolio. It actually just broke $60,000 with this move up from Super Microcomputer. We're sitting at $60,035. I have to apologize to you guys because last week in the Super Microcomputer video, I said that this was my only position in this stock. That is not true. I forgot about a position that I hold in my Robinhood portfolio. It's a very small portfolio and I only hold 32 shares of Super Microcomputer. So in total, I have 232 shares of Super Microcomputer. Right now, my total invested amount is around $7,000 and the market value is around $8,000. So not much difference from where we are sitting at here. This is the major position overall that I have in Super Microcomputer. I don't hold it in my much larger portfolio just because it's a little bit more of a risky company. But other than that, I also hold Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. And also a couple dividend ETFs, SCHD and VYM, and a sizable cash position of around $13,500. But today we are going to be talking about Super Microcomputer. As I mentioned in the intro, this stock is up over 35% in just the last week alone. If we look at the last year, it's still down almost 51%, and it hit an all-time high of around $120 back in March of 2024. From that point, the stock is still down almost 70%. The biggest reason that Super Microcomputer made this 35% move up in the last week is because of this announcement that they posted on their website. They posted this on February 3rd, so Monday of last week, and they announced that they are going to have a conference call and website for their second quarter fiscal results on Tuesday, February 11th. And this is absolutely massive for the company. They have not posted financial results since August of last year. The reason that this is so huge is for two main points. The first being the obvious one that they are running very close to the deadline set by the NASDAQ of February 25th that they need to have results posted by, otherwise they could face delisting from the exchange. The second main reason that this is important is because it will provide investors with insight into what the business is actually doing and how well they are performing. And that leads perfectly into the second announcement that Super Microcomputer made on their website in the last week that caused the stock to run up even further. And it was the fact that they are now in full production of systems utilizing NVIDIA's Blackwell GPUs. Obviously, this production will not have any impact on their earnings that are expected to be announced on February 11th. However, they could provide some very important guidance around how orders are looking for these new devices, and that could be important for the stock moving forward. Right now, analysts are expecting EPS to come in at 63 cents for this announcement and revenue to come in at $5.78 billion. But one call out for the 11th is that there is going to be a lot of information digested by investors around this stock and its performance overall. Depending on how much information we actually get about the last couple of quarters and also guidance moving forward, we could see a lot of different movements in the stock price. One example of that is actually AMD. They posted their numbers in the last week and they actually had top and bottom line beats. But even with that, the stock moved down by over 10% after the announcement. And ultimately, the drop in AMD's stock price came down to slowing growth in their data center revenue. revenue. They were previously growing their revenue by triple digits. However, in this quarter, they only posted growth of 69% year over year. And this could be a similar concern for Supermicro Computer. Obviously, we are missing a little bit of data over the last 6 months or so. However, if we look back at that time period, they were growing by 142% in June of last year. If that trend had continued from 200% in March of last year down to 142%, they might be in a similar boat where they're only growing their top line numbers by 50% year over year. And this is definitely a realistic possibility because if we look at December of last year, they put up $3.66 billion of revenue. If they come through with $5.78 billion of revenue like analysts are expecting, that's around 50 to 60% growth year over year. But the reason this is probably not a big deal is because no company growing their top line numbers by 50% should be trading at a forward valuation of 10.67. And it's not like they're only seeing this growth on their top line numbers. We can see that over the last couple of years, Supermicro Computer has gone from a company with a trailing 12-month EPS of around 20 cents to currently having a trailing 12-month EPS of around $2. Obviously, we'll have to see what they post for their bottom line numbers, but right now, analysts are expecting great years for 2025 and 2026. For 2025, the average EPS estimate is $2.78. The low is $2.57, and the high is $3.02. And those numbers are expected to jump up massively in 2026. $3.69 for the average, $2.99 for the low, and then $5.01 for the high. And the valuation is really the reason that I own stock in this company, because right now it's just so undervalued that it appears that really if anything goes right for this company over the next couple of years, even if they just post their earnings from the last 6 months, this stock could jump up in a major way. If we talk about underperformance, the $2.57, that would put their forward P ratio currently at 14.15. That is still below where this company should be trading at. It should easily trade at a 15 PE, if not a 20 to 25. That would put its price anywhere from $40 up to $64 per share. Inline performance resulting in $2.78 would be a forward P ratio of 13 currently. I believe that this company could easily trade between a 20 and 30 PE ratio in this instance, which would result in a price of anywhere from $55 per share to $83 per share. And if the stock outperforms in 2025 and puts up $3.02 of EPS, that would be a forward P ratio of 12. I believe that Supermicro Computer should trade in line with a lot of NASDAQ companies, which is anywhere from a 25 to a 35, which would result in a price of $75 per share all the way up to $105 per share. And really the reason that I own this stock is because I think even if they come through and they underperform or they even provide inline performance over the next year, they should easily be trading between a 20 and a 25 forward P ratio. That could result in a stock price of around $60 per share. And that's basically a double up from where I was buying the stock at. Now it's a little less than a double up because of the recent run up. However, that to me provides a very nice risk to reward ratio for this company. And the crazy thing about all of these price targets is they are not out of the realm of possibility. If we look at the last year alone, Supermicro Computer has traded at all of these prices and even higher. Again, back in March, the stock was $120 per share. So for the stock to go up to $105 per share, it's been there before in the last year. It definitely could get there in the next year. But remember, past performance does not indicate future results. So keep that in mind and don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys again so much for the continued support. If you enjoy this type of video, make sure to subscribe for more and drop a like down below. Thank you guys again for watching and have a wonderful rest of your day. And for the joke of the day, today my wife asked me if I had seen the Dog Bowl. Check the comments down below for my response. Thanks for watching.